Okay, joining us now, it's that time of the month again, the infamous Kuppy's Corner time. Harris Kupperman, it's a pleasure having you back.
Thanks for having me here.
So I think you wanted to talk shipping.
Yeah, let's go talk some shipping.
Yeah, something
So,
something that just guys amongst themselves do. On a weekend, on a Friday afternoon, why not talk shipping?
yeah, well, I guess the first time you had me on, God, is about 6, 9 months ago, and I told you need to buy shipping. And then you had me on a few other times since, and I said you need to buy shipping. And hey, it's always fun to do a victory lap, but I was right. You should have bought
That's
shipping.
true. You're
And I'm going to
absolutely right.
And I'm going to tell you should still buy shipping because we're in the second inning of what will be a 2-year bull run, 3-year bull run, whatever it is. And shipping bull runs, they don't stop after a double. And, Scorpio's now doubled from where I told everyone to buy it, but they don't stop at a double. These things go 5, 10, 20 bagger. It's just the nature of shipping. When you start over earning in terms of owning your vessels, you start making 100% on your capital. I'm not talking about 100% every few years. I'm talking about maybe every few months.
So is the market realizing that this is occurring and basically getting out ahead of the fundamentals improving, or are the fundamentals actually showing up in the numbers? Like, is it a case of the stocks running ahead of the fundamentals, or is this a case where the stocks are basically just reflecting the improvement in the actual industry?
Well, I think the stocks are lagging the fundamentals. I mean, when you think of shipping company, what you're really looking at is two factors. You're looking at NAV, which is pretty easy. What are these vessels worth and how much debt do they have? And then earnings. And the earnings gets tacked onto NAV. You don't value these things on a multiple of earnings, but you value them as a multiple of NAV because you say if this company is going to earn obscenely high returns on capital, maybe it's worth 1.5 times NAV, or maybe it's even worth 2 times NAV because there's no more vessels coming. It's a financing business in the end. And what you're looking at is a lot of these stocks doubled, and they still traded at a discount to where NAV was at the start of the year. But NAV is going up,
So
and yeah,
they're just that cheap. And so you're saying even with the doubling of these stocks, they're still cheap, and it's the mistake will be selling them too early.
yeah. I mean, look at Scorpio. That's the one I was banging the table about last time when
Okay.
you had me on, and it was at 16 a share. NAV was about 30, so it traded for 60 cents on the dollar of NAV, 55, 60 cents. Well, NAV is approaching 40 today, and the company hasn't really had much in the way of earnings, but the vessels are going up in price. You can look at secondhand vessel sales. It's a reasonably liquid market, but the price of an LR and MR, these things are all up a few $1,000,000 this year. Now multiply that by 128 vessels and divide it by 58 million shares, and you see what's happening. Every $1,000,000 a vessel goes up, it's adding about $2 a share to NAV, and these vessels are up a few $1,000,000 each.
So Scorpio was the stock that the CEO recently went and did kind of an all-in move where he went out and bought just outright paid up for options on the actual exchange, like call options, like out of the money call options, which is something very unusual. Usually they're just they're going the other way. They're exercising call options that they get given at discounts. What did you like? What was going through his mind? Is he just that bullish, or do you think he was trying to send a signal and juice it a little bit more? What's your thinking there?
Well, let's analyze this a bit. I've been doing this for 20 years. This might be the first time that I've seen anyone buy call options that are 3-month call options. But at the same time, you also talk about Robert Bugbee, who is one of the greatest stock promoters of all time. If Elon Musk had just bought the 420 call, as opposed to saying he's getting bought at 420, we'd be at 500 right now. Elon Musk's kind of an amateur in this game compared to true visionaries like Bugbee. Look, he owns millions of shares. He bought $15 million of stock 2 weeks ago. It's not like he's needs more exposure. He was trying to tell the world, look, I'm buying these call options because I genuinely think these are a good investment. And he got what he was looking for. The stock went up $6 in the week after he did it.
So I have a friend slash client that's got into these shipping stocks in a big way, and he asked me to chat with you about one particular kind of aspect. You love the Scorpio tankers. That's your favorite pick. But yet, I think when you had spoken to him, you had put him onto this research analyst that writes on Seeking Alpha. What's his name?
Jay Mintzmeyer.
Right. And when he went and subscribed to his research service, he found that Jay doesn't like Scorpio nearly as much as you. and he had some other names that he also kind of recommends more highly. Why do you think that Scorpio is the kind of go-to stock that you should be long on this? And what do you think about the others? Are you bullish on those just as much, or is it just a matter of like you're buying the big one that you know that you feel is going to participate the most? It's the most liquid and the most safe.
So I guess you have a couple of factors. Let's start with the fact that I'm super bullish on product tankers. IMO 2020 kicks in about 6 weeks, and demand for low sulfur fuel is going to go up by 2-3 million barrels a day. And only clean product tankers can transport that, and demand for their business is going to go up quite dramatically. You also have one of the largest refineries in the world coming online at the turn of the year, which will add a dramatic increase in export capacity of refineries. It's in the Middle East. So I'm just bullish product tankers. When you look at the various product tanker companies, they all have hair. This is shipping. You're dealing with bad people. You're dealing with bad managements. You have a lot of problems. So you have to look through it and say, which sort of risk do I want to take? And then you also have to look through it and say, what gives me the most upside? Jay Mintzmeyer is one of the smartest guys in this industry. He takes a very analytical approach and says, who has the cheapest fleet that I could buy? Because if product tanker values go up and if charter rates go up, the guy with the cheapest fleet has the most leverage to what's going to happen. I look at it and say, this is all a big game of fund flows, and fund flow is going to go to the most liquid guy. And when you look at the other players, you know, there's Diamond, there's TK, there's Navios, there's Torm or D'Amico in Europe. I look at these guys and I say, who's the best stock promoter alive? And Robert Bugbee is my hero in that regard. I mean, he gave a podcast this morning and he sat there for an hour and told you basically why you should buy him and no one else. And well, it was at a shipping conference, and you see the other podcasts, and the other guys talk about sort of innate things that are useful to showing how they know about the business. But in the end, Robert Bugbee made me want to buy stock, and everyone else kind of made me think, that guy, you know, I'd maybe hire him as like a mid-level employee. You know, you go with the fund flows, and don't forget, when you're at a bear market, you buy the cheapest vessels. We've been in a bear market for 10 years. So you always want to go and cycle between what's cheapest. In a bull market, sometimes you want to buy the most overvalued guy because they're going to do creative things. You know, if you look at, say, Frontline, which is a Frederickson company, everyone always says it's overvalued. Yet Frontline continuously does smart things with their shares to buy up other guys that are undervalued, and they create a ton of value by being overvalued, which is why the equity markets are willing to give that guy a currency to work with, because he consistently does smart things on the way up. He blows up on the way down, but he does things on the way up that are smart. Yeah. And I think Scorpio is going to do stuff on the way up that's smart. Look, they just bought a very large fleet from Trafigura about a month ago. The fine guys at Trafigura, who definitely aren't stupid, they agreed to be paid in Scorpio stock. I think Scorpio may have overpaid ever so slightly for this fleet. But what they've done is they've further consolidated the industry. The industry of LR2s is one of the most consolidated segments in shipping. It's like OPEC. And by continuing to consolidate it, you can basically do better triangulation and get better charter rates, but you can also extort the Vitals of the world. So I think he's doing smart things, and he deserves a better currency, and I'm willing to pay up a slightly higher multiple. Put it that way.
So yeah, that's great, and it makes a lot of sense. It actually reminds me of the story of way back when, and I believe it was in the 80s. There was a guy on one of the market wizards. He got bullish stocks, and he went and he gave his buddy some money to manage, and the guy went and bought all these value names and all these cheap stocks, and then the stock market was roaring ahead, and he went and looked at his account, and he realized that it wasn't keeping up with the market, and he said, "What are you doing?" And he says, "Well, I'm buying you all these cheap stocks." He goes, "No, I don't want those." And so what he did was he found a couple. He went to a brokerage office and he says, "I want your two youngest brokers." And he told them very succinctly, he says, "I want you to buy the stocks that are the most expensive, and I want you to keep buying them and do this and stuff like that." And he ended up making a fortune on it, and it's very much the same kind of
buy me fraud.
Yeah. So I completely understand.
I've just seen this in shipping. I saw this in the great uranium bull market. I've seen this in lots of these little niche esoteric bull markets. You want to be with the guy who's the best stock promoter and the guy that all the fund flows go to, because you end up with one industry leader in a lot of seconds, and the industry leader keeps going. Think of the dichotomy between, you know, Bitcoin and every other crypto. You know, there's only one. It's the same concept.
No, that makes complete sense. Now, in terms of the exposure and how much uptake this is getting, and you mentioned that you think that this is just starting, do you see the hedge funds climbing in on this name? Is it becoming a little bit of Hotel California? Are you worried about that aspect of it at all?
Oh, it's definitely Hotel California. It's horrible. It's the worst hedge fund hotel I've ever seen. This one stock. I just had a guy call me out of the blue about an hour ago. We talked. I probably shouldn't say which firm, but it's about a $500 million firm, and they knew nothing about shipping. I mean, super nice guy. I mean, they run a healthcare fund,
Right. And so
but
they're now looking at shipping because they just see this stuff running and they got to get in.
yeah. I mean, look, when healthcare starts doing shipping, uh, it kind of makes you do hey, wait a second. But then you realize that no one's really talking about it. When was the last time Kramer had someone in the shipping industry on TV? And it's not like charter rates are going down anytime soon. I mean, literally in 6 weeks, demand for LR2s is going to go up by like 15-20%. And then a few weeks after that, this refinery comes online and demand goes up again. And what we've seen is supply actually decreasing because I mean, I should make this point to you for your readers. There's lots of vessels of class, different vessel classes. And LR2 it has an epoxy liner and it carries clean cargoes. And what you have is like Aframax, which carries dirty cargoes, which is unrefined crude. So when Aframax rate spiked 2 weeks ago, a lot of guys who had clean tankers said, screw this, I want to get paid more. And they went dirty, which they basically took their vessel out of the clean trade. You can go from clean to dirty, but it's really hard to go dirty back to clean. It's a multi-month process and costs a few $1,000,000. So what's happened is that the actual fleet of LR2s has shrank quite considerably. I've seen different numbers, and I don't actually believe any numbers I see in the shipping industry, but it's probably shrank somewhere more than 5, less than 10, at a time when demand might go up 15, 20 in the next 2 months. Like LR2s, which had been trading most of the year at like 15,000, hit 100,000 last week. They've backed off a bit to about 40, 50 today, but at 50,000, Scorpio, which is a $33 stock, is going to earn $25 a share. I mean, just put that all in perspective and realize that the good thing that I'm betting on owning this stock hasn't yet happened. This is all just guys doing dumb stuff, trying to make some extra money along the way. I mean, I think one of the rare things you see when you make a bet, and I saw this with my uranium bet 10, 12 years ago in uranium juniors. I mean, you make a bet on a macro event. Oftentimes you end up being too optimistic and you get it sort of wrong and you think you have a 10 bagger and you make 30% and you're like, that was okay, whatever. And then every once in a while, the trend plays out better than you expect, like with uranium where you had 2 large mines flooding and it just goes parabolic. And what we've just seen with product tanker shipping is that all these LR2s just went dirty and charter rates went parabolic. It's actually paying out better than expected, which is probably why Robert Bugbee is buying call options.
That's right. Yeah. So now when you kind of think about this, are you trying to close your eyes and just not like think about, is there any point that you would say, oh, this has gotten ahead of itself over the short run and I take some off the table? Or is this a point where you're just, even as it rallies and it doubles in your face, you're just like the tough trade is going to be hanging on. And that's the often the tough trade is the bright trade.
I had a really smart friend, God, this is like 2003 when I first started buying gold. And I bought some gold futures at 330 and I started buying the equities like 350. And at the time, most of these companies were losing globs of money and they traded at like fractions of replacement cost. And as we all know, if you just bought a basket of gold juniors in 2003, even with all the ones that didn't make it, you probably made 10 or 20 times your money. I know this because I made like 10 or 20 times my money on these things. And I had a friend who they went up about 20%. And he's like, well, I'm going to take half off the table. I'm going to buy the pullback. And there was no pullback. And it went up another 20%. He took the whole trade off. And then for 5 years, he watches these things go up like 10% a month. And he's like, man, I don't think it's going to be a pullback. And I'm like, nope, nope. When you catch one of these tigers, and you get to catch one of these a few times in your career where you just know you got it. And I've been following shipping for 20 years. So like, it's not like this sector just came to me all of a sudden. I've just been following this thing. But when you know you got it and things inflect positively where your thesis gets better along the way, like the only thing you could do is hit the sell button. That's the only way you can screw it up.
Right. It's the only way you can screw it up, by hitting the sell button.
And the best thing you can do is turn off your phone, turn off your computers. and just go backpack in New Zealand for the next 2 years. Like,
Well, like, isn't that the truth of the matter? Because isn't the hardest thing often just sitting? And, back to Jesse Livermore often said that the big money is often made sitting.
it's just sitting and not screwing up.
That's right, not screwing up. So there you go, over trading it and trying to catch the 5% swings is what's going to hurt you here, according to Kuppy.